Welcome everyone to the Vested Interest channel. This is Shane, and in this video we are going to do our weekly portfolio update. We did add $797 in new capital to the portfolio, so we will cover what we bought with those funds. We will also cover any options I was in for the week, any dividends received, everything that we did in the portfolio this week, all the activity. I think it's important for those of us in this space to be transparent about what we are doing in our portfolio, so those of you out there who are viewing can see real portfolios built out over time, and that we are not just talking about this stuff. We are there with you, investing in the market, and you can see what we are doing and not just hear what we are talking about. All right, first up, options received. We did have some options that hit this week. Well, one options play anyway. We sold to open one covered call on ticker UNH. This is Universal Healthcare Systems. And the -1 stands for 100 shares, right? 100 shares equals one contract. Opened on 9/15th, which was Monday, and closed September 19th, that was Friday, for a $380 strike price, 60 cents per share. After some fees, we received $59.47 in options premium. That's the $59.47 above. And as you can see on Friday, this expired out of the money. So we keep the options premium, we keep the shares, and we look to possibly do that again in the future, maybe even next week. Next up, dividends. We did receive dividends from a couple different companies here this week, $144.46 total. And it was broken down between two companies. Alphabet, ticker GOOGL, paid us $29.05. And with those funds, we do have the DRIP set, and Alphabet is out of the information technology sector, if I didn't mention that. We do have the DRIP set, and so that just means, or stands for, Dividend Reinvestment Plan, and that means anytime a company pays out dividends, in this case Alphabet, and the $29.05, those funds automatically go right back in and get reinvested into the same company. So in this case, they picked up 0.11622 more shares of Google. Also received on the same date there, September 15th, $115.41 from NextEra Energy, ticker NEE. This is a utility company out of the utility sector. And that same thing gets reinvested right back into NextEra Energy, picking up 1.61079 more shares of NextEra Energy. And the new shares picked up from Google and NextEra Energy added an additional $4.85 in additional passive income over the next calendar year. And now when you hear people talk about the dividend snowball or compounded interest, this is really what they are referring to. So we already have bought or had bought shares of Google or Alphabet, ticker GOOGL, and NextEra Energy, ticker NEE. Those shares paid out dividends. Those dividends get reinvested. Those reinvested dividends add additional passive income, and that snowball continues to grow even if I don't add any additional capital to Google or NextEra Energy. Now, it'll grow faster if I add additional capital, obviously, but it will continue to grow every time these companies pay out dividends and get reinvested. That is the dividend snowball. That is compounded interest in action, right? Now we get into the new capital added on Monday. We did go in and add $281.03. With those funds, we picked up one share of Union Pacific, ticker UNP. This is a railroad out of the industrial sector. Picked up that one share at $214.78. Added to our Comcast position, ticker CMCSA. This is out of the Comcast is out of the communications sector. Comcast is out of the communications sector. Picked up those two shares at $33.13. And these shares picked up added an additional $8.16 in passive income over the next calendar year. These are also part of the if you watch the stocks that I'm looking to buy in September video, Union Pacific and Comcast were both in that video. So these are the ones I'm looking to focus on this month. Union Pacific, I really like under 220. So if it stays under 220 or around that 220 and below, I'll look to continue to add there. Comcast, even actually by the end of the week, had pulled back a little bit more. Like this one under my cost basis. My cost basis is around $38. So I'll look to continue to build this one out as we continue through the month of September. Now, if we see other opportunities, obviously we'll look to those as well. Now, I did go back in pretty early in the week. Usually I buy on Mondays and Thursdays or Fridays, primarily Mondays and Fridays. But this week I had to do some traveling for work, so I knew I was going to be possibly not able to get back into the market. So I went ahead and did my investing early in the week on Monday and Tuesday. We added an additional $516.29. With those funds, we added one more share to our Vanguard. This ticker VXUS. Vanguard's XUS is all of the companies outside of the United States. So these are all the foreign companies out there. That's what this ETF covers. One share added at $73.75. One more share to our Schwab Strategic Dividend Growth ETF, ticker SCHD. And these are part of our weekly buys, as well as VTR, Vanguard's Total Stock Market ETF, ticker VTI, added one more share there at $325.71. Also added one more share to our Pfizer position, ticker PFE, out of the healthcare sector, picked up that one share at $23.95. And Vici, we added a couple shares to our Vici properties there. It finally dropped back under $33 per share. I really like it under 32. It actually did drop a little lower, under 32 by the end of the week. So this one might be one we're looking to add to while it's under 32, but dropped under 33. So we picked up a couple more shares of Vici. This is a REIT out of the real estate sector. And again, picked up those shares at $32.72. This $516.29, new shares picked up with those funds, added an additional $11.44 in passive income over the next calendar year. Total invested $797.32 total. Passive income added $24.45. Quick run through the sector weights here. Communications currently makes up 9.39% of the portfolio. Consumer discretionary at 2.95%. Consumer staples makes up 8.2% of the portfolio. Energy makes up 9.45% of the pie. Financials at 6.37%. Healthcare makes up the largest slice of the pie, though information technology is giving it a run for its money. But at 16.85%, it still is the largest position currently. Industrials at 6.04%. Technology makes up 6.25% of the portfolio. Google continues to rebound ever so nicely, as well as Lam Research. That one has really run up also. Materials makes up 2.41%, utilities at 3.39%. REITs in real estate makes up 5.56% of the overall pie, and ETFs at 13.15%. And eventually ETFs will be the largest slice of the pie just by the nature of adding to SCHD, VXUS, and VTI. Now for VTI, we are going to add to those till we get to 100 shares, probably close to the end of the year whenever we finally reach that. Then we're going to reevaluate. The overall market is a little overvalued in my opinion. That doesn't mean there aren't deals in the market itself, right? Just because the market may be overvalued does not mean there aren't deals inside the market. But VTI has really run up. So that one may be one I back off once I get to 100 shares, or at least maybe by the end of the year, whichever comes first. I may back off a little bit and add to VXUS a little bit more and SCHD a little bit more, and then maybe be a little more selective on whenever I purchase VTI. I really like a big pullback on VTI, the overall market. I wouldn't mind seeing a 15, 20% drop so I could pick up the market a little bit cheaper. So again, we're going to wait and see where the market's at. But once I get to 100 shares, I may back off VTI a little bit, focus more on VXUS and SCHD while I feel like VTI is overvalued, and wait for a bit of a pullback on that one. And I may just, do it every other week instead of every week. We'll see. I'll make that decision once I get to 100 shares total. Over to the right, you can see those same sector weights, the percentages that matches up with the pie, as well as the dollar amount allocated to each sector as well. All right, here it is, and I do show this every single week. Again, I think it's important for those of us in this space talking about finances to be transparent about what we are doing. So I show you what I'm buying every week. I show you my overall portfolio every week, so you can see a real portfolio built out over time, the ups and downs around holding individual positions, as well as holding some of the ETFs, which I have. So you can see, hey, the market goes up and down. Comcast still down, right? This one continues to drop. I feel like every other week it's down by 31, kind of floating between $31 to $33 per share. But I'm going to continue to buy it, bring down my cost basis, bring up my potential future return. I feel like it's a good company. I've done my research on the company. The fundamentals of the company have not changed. So if I was comfortable buying at $38.40, I should be more than comfortable buying more at $31.59. Same thing with Occidental, same thing with Pfizer, same thing with Vale, though Vale has really rebounded recently as well. So not as big of a discount on that one in my opinion. But there are other companies that I'm buying as well. Union Pacific, I added to this week. It's up still, right? So just because a company is up or just because a company is down is not a reason to buy. It's not a reason to sell. What do you feel the value, or what have you valued the company at? If the company is up in your portfolio, but you still feel it's a good value, you should be buying. If the company in your portfolio has run up and you feel like it's overpriced, you should be holding the company, or possibly if you've set some rules in your portfolio where you're willing to lock in some gains, then you should be taking those gains and rolling the funds into other positions you do feel are undervalued. So quick run through the biggest winners in the portfolio. Lam Research, that one right now is the biggest winner at 73.91%. Second place is still AT&T, 67.3%. Google in third place, 61.63%. So Google and Lam Research, let's talk about those for a couple seconds. I was buying these not too very long ago whenever they really had big pullbacks. I think it was back in April. And as you can see here, just within, 6 months, already huge returns on those two positions. UNH was another one I was buying not too long ago, already up 22.94%. So take advantage of those dips. Like I said, when you see red in the market, that is when you should be looking at those companies, and you really should be looking at companies before they get those big pullbacks. Kind of figure out what companies you'd like to invest in, what's a price you're willing to pay, and there's nothing wrong with sitting back and waiting for those companies to hit those prices, right? Be patient. There are dips in the market, there are dips in individual stocks, and there's dips for a multitude of reasons, right? Could be the overall market is pulling back, could be a sector that's pulling back, could be negative news about the company like that we saw with UNH, for example, right? But whenever you see those opportunities, don't be afraid to pounce. I've said this before, and I'll probably say it again. I feel like the stock market is the only market people see sales, like UNH, like Google, like Lam Research, whenever they were on sale, and they avoid the companies instead of buying more of them. Don't avoid the companies just because there's a pullback, thinking, oh, now it must be a terrible company. If the fundamentals of the company haven't changed, if their revenue is still growing, their margins are still expanding, they're paying down debt, the fundamentals are still intact, you've done your research, you've figured out a price you're willing to pay for it, and they hit those prices, they do those big pullbacks, that's when you should be jumping in and buying those positions, right? I could have sat back and said, oh, Lam Research, it's pulled back. What's wrong with the company? Nope. I had reviewed the company in one of my stock pick of the day videos. I had added it to my watch list. Then I had done some more research into its balance sheet and income statement. I had set a price I was willing to pay. And when it hit that price, I bought it. Same thing with UNH. There were several people talking about UNH months before I bought it. There was a big pullbacks months before I bought it, but it wasn't in my price range. But once it did hit my price range, then I jumped in and bought it. Nothing wrong. Same thing with Google, right? AT&T. When I was buying AT&T, a lot of people were selling AT&T. There were some issues with the company, but they had a plan. They were divesting out of some businesses that they had acquired. They were splitting the company off, doing a spinoff. They had a plan for paying down debt, and they have executed that plan, right? So now I'm up 67.3%. So don't be afraid to go against the grain. Other people may be, saying stuff that, is negative about a company, or they may be telling you you're making a mistake. Stick to your investing strategy. Stick to your investing criteria. Stick to what you know. And again, when you see those big pullbacks, those are the times to jump in and go ahead and pick up those companies that you've done the research on, regardless of what everyone else is doing, regardless of what the market is pricing it at. Take advantage of the opportunities. All right. So in this column is all the different tickers in the portfolio, all the different positions, total shares. All of these numbers will be as of the close of business on Friday. Really Saturday morning is whenever I jumped in here and updated it. So we'll say as of Saturday morning. Current price here, market value in this column, average share price here, purchase price here. This does include reinvested dividends. Total return, whether I'm up or down, you're going to see it, right? I've got 4 positions in the red right now. I've had 6, 8, 10 positions in the red at times, and then I've had just 1 or 2. It's a stock market. You have a bunch of different positions in the market. They go up at different times for different reasons. Different sectors go up at different times for different reasons. But I'm going to show you what I'm doing out in the open. So you're going to see whenever I am up and down percent return here, what sector each position falls in, whether they're a quarterly, monthly, semi-annual payer. I do not have any monthly payers. I have had monthly payers in the past. Realty Income was one of them. I held Maine for a short period of time. Current yield here, my yield on cost in this column. Portfolio weighting, I do have a rule in the portfolio. For those of you who have been here for a while, you've heard me say this multiple times, but I don't want any one position to be more than 10% of the portfolio. I do not want any one sector to be more than 20% of the portfolio. Now, some of these are starting to run up. Lam Research, for example, 8.05%. Google, 8.2%. UNH, 8.18%. Now, if they continue to run up and they become 10% or more, that does not mean I'm going to sell them per se. It just means I will not add to them, and I'll add to other positions, and eventually they'll come back down to in line. So just because a position becomes greater than 10% of the portfolio, if that happens, we're getting close, but it hasn't happened yet. That does not necessarily mean I am selling the position. It just means I am not going to be adding to it, even if it was to drop down. Possibly, I don't know, depending on how much it dropped down and for what reasons. Maybe we add to it and we break our rule, but for now, I would just back off the position, because really the reason that it's becoming more of a higher weighting in the portfolio is because it's run up. So if it drops down, obviously that would drop the percentage as well. Estimated annual income in this column, dividend growth year over year. Here I do update this as they update their dividends. Payout months, and maybe I didn't mention that. That's what the yellow means. The companies that are highlighted in yellow have raised their dividends already this year. So we were only waiting on a couple. LenB, for example, hasn't raised their dividend yet. OHI has not been raising their dividend for the past several years, so I don't know if they will. And AT&T would be the other one. So really just LenB is the only one I'm still expecting a raise for this year. Portfolio weighting, I think I mentioned. Estimated annual income in this column. Dividend growth year over year. Here I do adjust this as they adjust their payouts. Payout months here. Now, I know some companies might slip from one month to the other. I think VXUS, for example, is going to pay out in September, but VTI has not announced their payment. They may slip into October. Same thing with SCHD. I think they are paying in October. I know I've got it written down as September. Those are the typical months they pay in, but it may slip from one month to the next, especially for those companies that pay towards the end of a month. Where a company sits at 15% of a 52-week low, let's talk about this for a second. We can use UNH, for example. It has run up a little bit, $336.69. So I'm willing to buy this at $269.79. My cost basis is actually a little bit above 15% of a 52-week low. So I would like it to pull back so I can bring this down. But since it is above 15% of a 52-week low, I would not be able to add to this position unless it drops under this 269.79. For some other ones like Kroger, for example, my average cost per share is $45.40. 15% of a 52-week low is $62.74. So even though Kroger is over 15% of a 52-week low currently in price, I could add to it because it wouldn't bring up my average cost per share to $62.74. Now, I'll probably wait for it to drop under this, right? I'd like to drop back into the 50s before I really add to it. That's kind of where I would feel comfortable, maybe 58, 57 per share. I would probably add some more to Kroger. But that's how I use this column. I want my average cost per share to be under 15% of a 52-week low, preferably. Total shares, 6,992.408 shares. Market value of the portfolio, $433,034.03. Purchase price, $364,746.41. Total return, I am up $65,287.61, or 17.9%. I do say this a lot also. I do not focus on total return. I know some people, that's all they focus on is total return. But unless you sell out of all these positions, you do not lock in the total return. So unless you plan on selling out of positions in the future, I don't know why total return is the only thing you'd focus on. I'm a dividend growth investor. I am not a total return investor. Again, nice to see that I'm up, but unless you plan on selling your shares, that is the only way you are going to lock in your total return. Which sector they fall in, we already talked about. Portfolio salary. Now, as you can see, per month, right now, making $1,089.07 from the portfolio per week, $251.32 per day, 365 days a year, $35.81, and per hour, 8,760 hours a year, $1.49. It's like the portfolio is working a second job or a little side job and providing income that grows over time. That's the idea behind it. Current dividend yield 3.039%. My yield on cost 3.583%. And this is what I'm focused on. That's why it's circled over here in red. All of the positions in the portfolio pay out dividends, and this is the estimated annual income from those dividends. Sits at $13,068.90 and continues to grow week over week, month over month, year over year as I add new capital, as the positions in the portfolio raise their dividends, as those dividends get reinvested, and hopefully it will continue to do so. Dividend growth year over year at 5.91%. So that is it for the portfolio update. What are you doing in your portfolio? What did you buy this week? What are you looking to add? Any new positions that you've added? Are you taking any profits? I know some positions and the overall market, in my opinion, is getting a little frothy, maybe hitting some all-time highs in your portfolio. Maybe there's some positions that you're looking to take profit. Let me know what you're looking to take profit on, if anything, or are you sitting on the sidelines with some cash waiting for a pullback? Love to know what's going on in your portfolio. Drop them all down in the comments. If you have any questions, drop those down there as well. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, subscribe to the channel, join us on this journey to financial freedom, join the vested interest community, and let me know what's going on in your portfolio. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have a company like that and you tune in to the Stock Pick of the Day series, you should tune into that series. But if you have a company you'd like me to cover in that series, drop it in the comment section. I'll work it in on a day that it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, one last thing. Today is actually my birthday, so I'm just going to give myself a happy birthday wish here on September 21st. I was born in 1979. Stevens Point, Wisconsin is where I was born. So happy birthday to myself. And I'm going to celebrate it today by relaxing around the house, and maybe even, if the weather is nice enough, get into the pool before we close it up here in a week or so. Hope you have a great day. I know that I will have a great day. I think my wife's going to even make me a birthday cake later today. So thank you for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Invest journey, educational, and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. Hey, thanks for stopping by. Thanks for watching to the end. Really appreciate all of you out there. Thank you so much.